Hi, I'm Scott Olson, co-founder of LTCshop.com and author of Long-Term Care Insurance Now. Should you self-insure for long-term care, or should you buy some kind of long-term care insurance policy? There is very little to gain by self-insuring for long-term care. The bigger your investment portfolio, the less there is to gain from self-insuring. Now, I'm going to repeat that. The bigger your investment portfolio, the less there is to gain from self-insuring. You probably never heard anyone say that before now. In other words, the more money you have, the more sense it makes to own long-term care insurance. Let's look at some examples. Suppose you can buy $1 million of long-term care insurance benefits for $6,000 per year. Now, I don't know if you can purchase $1 million of long-term care insurance for $6,000 per year. The cost of a long-term care insurance policy depends upon many factors, including your age at the time that you apply for a policy, your health history, your gender, your marital status, and even the state of residence. Many of my clients buy more than $1 million of long-term care insurance benefits and pay less than $6,000 per year. But for the sake of discussion, let's just assume that you can buy $1 million of long-term care insurance benefits for an annual premium of $6,000. To simplify the math, let's also assume your investment portfolio is worth exactly $1 million. Now, if you choose to self-insure for long-term care and not spend $6,000 for long-term care insurance, your portfolio would only increase by 60 basis points. Now, for those unfamiliar with that term, 60 basis points is an easy way to say 0.6% or 0.6%. $6,000 is 0.6% of 1 million. Now, if you have a $1 million investment portfolio, the upside of self-insuring for long-term care is only 60 basis points per year. The downside of self-insuring could be several $100,000, possibly even $1 million for a catastrophic long-term care event. If you have a $2 million investment portfolio, the upside of self-insuring is only 30 basis points per year. The downside of self-insuring could again be several $100,000, maybe even exceeding $1 million or more for a catastrophic long-term care event. If you have $3 million in your investment portfolio, the upside of self-insuring is only 20 basis points per year. The downside of self-insuring could again be several $100,000 or even $1 million or more. If you have a $4 million investment portfolio, the upside of self-insuring is only 15 basis points per year. The downside of self-insuring could again be several $100,000 or even $1 million or more. This is why I said at the beginning of this episode, the bigger your investment portfolio, the less there is to gain by self-insuring. Here's another way to look at it. Would you alter your asset allocation to gain an extra 60 basis points per year if the new asset allocation could result in you losing hundreds of thousands of dollars from your portfolio? Of course, you would not alter your asset allocation to gain only 60 basis points if it would put hundreds of thousands of dollars at risk. That is the exact reason why long-term care insurance makes sense for people with a 7-figure investment portfolio. Another way to say it would be this. Wouldn't it make sense to reduce the return on your portfolio by 60 basis points to protect it from potentially losing hundreds of thousands? Again, the answer is obvious. Of course you would do that. Sacrificing 60 basis points to protect hundreds of thousands of dollars is a no-brainer. Long-term care insurance is portfolio insurance. I've been banned from some early retirement forums for daring to make such a heretical statement. So I'll say it again. Long-term care insurance is portfolio insurance. A catastrophic long-term care event is probably the only thing in your life that could cost 7 figures, other than maybe your residence. By sacrificing a little bit of your return each year, you can protect your portfolio from what is probably the only catastrophic risks from which you have not yet protected your investments. There is very little to gain by self-insuring. There is potentially a lot to lose by self-insuring. Why would anyone choose not to protect themselves from what is probably their largest potential loss? When all the emotion is removed from the decision, the choice to own or not own long-term care insurance boils down to fundamental risk management. It's logical. It just makes sense. Thank you.